Welcome to the Deep Dive, your shortcut to understanding the biggest stories shaping our world. Today, we're taking a deep dive into Circle Internet Financial and its, well, pretty groundbreaking creation, USD coin or USDC.
Right, and this isn't just, another crypto thing. Circle is really at the center of what people are calling the digital dollar revolution.
Absolutely. I mean, think about it. Their USDC stablecoin. It's got a hefty 24% market share. We're talking a $250 billion stablecoin market here.
That's significant.
And if you've been watching the markets, their stock, CRCL, has just exploded. Something like a 750% surge since their IPO back in June 2025.
Yeah, that kind of jump definitely makes you sit up and take notice. So our mission today for you listening is really to unpack some key questions, like how does Circle actually make money here?
Right.
What makes USDC such a game changer for finance? And maybe you're wondering, is TCRCL a smart investment or is it more of a high-stakes bet right now?
Exactly. So consider this your guide. We want to get you up to speed on something that's, well, it's already changing how money moves globally. And probably how you'll handle money, too.
Let's get into it.
Okay, so maybe we start at the beginning. Circle Internet Financial, founded back in 2013, right? Jeremy Allaire and Sean Neville.
That's right. And initially, their goal was, broader, just making money move better. But then they made a pretty big pivot in 2018.
Ah, the launch of USDC.
Exactly. And it just took off, became the second largest stablecoin pretty quickly, grabbing that 24% share we mentioned.
Now, just a quick refresher for anyone who needs it. Stablecoins like USDC are different from, say, Bitcoin.
Fundamentally different. Bitcoin's value, it goes up and down wildly. USDC is designed to stay stable, pegged one-to-one with the US dollar.
So one USDC always equals $1, basically a digital dollar.
Precisely. It acts like a reliable bridge between, the crypto world and traditional money. And what keeps it stable, which is crucial for trust, is how it's backed. For every single USDC out there, Circle holds $1 or assets worth $1 in reserve.
Okay, and these aren't just any assets, right?
No. As of 2024, we're talking over $60 billion in reserves. And crucially, they're mostly held in super safe things like short-term U.S. Treasury bonds.
And they're audited.
Regularly audited, yeah. That transparency is a big deal in this space. And there's a clever market mechanism, too. If USDC ever dips just below $1.
Arbitrageurs jump in.
Exactly. Savvy traders buy the cheap USPC and redeem it with Circle for a full $1. That buying pressure pushes the price right back up to the peg. It's quite neat.
And technically it runs on blockchains, like Ethereum and Solana.
Yep, major ones. And that's the key to its speed and low cost. Think about sending money overseas traditionally.
Days. And fees. Lots of fees.
Right. With USDC, it can settle in seconds. For pennies, it's a total game changer for international payments.
Okay, so what's the real-world impact? Any numbers on that?
Oh, yeah. The transaction volume is staggering. In 2024, USDC handled transactions worth $27.6 trillion.
Wait, trillion, with a T?
Trillion, which, get this, was actually more than Visa and Mastercard's combined volume for that year.
Wow. Okay, that puts it in perspective.
So Circle's vision isn't just payments. They want to be this comprehensive financial hub, sort of like Venmo meets Western Union meets the New York Stock Exchange, but all for the crypto economy.
That's ambitious.
Very.
All right, so we know what USDC is, how it works, but the big question remains, how does Circle actually turn this into revenue?
Okay, yeah, the business model. It's interesting. It's basically like a high-tech money market fund, but with this crypto layer.
So when I buy USDC, I give them $1.
And they take that $1, along with everyone else's, and they invest it. Their main source of income is the interest they earn on those huge reserve holdings.
This $60 billion plus, mostly in T-bills.
Exactly. Predominantly short-term U.S. Treasuries, very low risk.
Right.
And the scale is what makes it work so well. In 2024, with around $60 billion in reserves and maybe a 4% yield, rough numbers.
They pulled in
about $1.68 billion in interest income. And that was like 99% of their total revenue.
99%? Wow.
Yeah. And the beauty is it scales. More people use USDC, the reserves grow, the interest earned grows. It's a very direct link, a powerful feedback loop.
Okay, so interest income is the big one. Are there other ways they make money?
There are. Smaller streams, but still important. They charge transaction fees for services like CircleMint. That's for businesses moving large amounts of USDC.
Right.
And something called programmable wallets, which helps developers build USDC into apps. Plus, they get licensing fees from big partners.
Like Visa, Stripe, PayPal, those kinds of names.
The very same.
Right.
So, yeah, multiple streams. But there's a catch, a pretty significant one.
Oh, okay. What's the catch?
Well, while that $1.68 billion sounds amazing, they don't keep all of it. They share a big chunk of that interest income with key partners,
Like Coinbase.
especially Coinbase. In 2024, it was over 60% they shared, around $900 million. That definitely eats into their profit margins.
Over half their main revenue stream gets shared. Oh.
Yeah. And there's another vulnerability, too. The whole model is really sensitive to interest rates.
Because their income is interest.
Exactly. So if the Fed cuts rates, some analysts are saying a 150 basis point cut, that's 1.5% by 2026.
That could hurt.
It could potentially even make Circle unprofitable in a worst-case scenario.
Oh.
So that reliance on rates is a big question mark for the long term.
Okay, let's talk more about that Coinbase partnership then. You said it's foundational.
Oh, absolutely. People call them the peanut butter and jelly of crypto sometimes. They actually launched USDC together back in 2018.
Through something called the Sender Consortium.
Right, a joint venture. And Coinbase's role since then has been huge for adoption. They integrated USDC everywhere, their exchange, their wallet, staking.
Making it super easy for their users to get it and use it.
Exactly. Millions of users suddenly had easy access. And you can see the benefit for Coinbase, too. In Q2 2025, their stablecoin revenue was $332 million. And a lot of that is thanks to USDC.
So it's like a symbiotic growth engine?
That's a great way to put it. Coinbase promotes USDC, more people use it, Circle's reserves grow, Circle earns more interest.
And then Circle shares that interest back with Coinbase.
Creating this virtuous cycle. Both companies win as USDC grows.
But as you said, the cost for Circle is significant margin pressure from that revenue share.
Definitely. Which makes that agreement renegotiation, supposedly post-2026, incredibly important. It really could be a make or break point for Circle's profitability going forward. Something to watch closely.
Okay, shifting gears a bit. Regulation. This was a big gray area for stablecoins for a long time, wasn't it?
A huge gray area, lots of uncertainty, which held back big players maybe. But then came the Genius Act in the U.S., July 2025.
Right, the Genius Act. That set clear rules.
Very clear rules, specifically for these payment stablecoins like USDC. It mandated things like 100% reserve backing.
Meaning cash or very safe bonds like treasuries.
Exactly. No funny business with reserves. It also requires regular audits, ensures people can redeem their stablecoins for $1 daily, and issuers have to register with regulators.
And it banned the riskier types, algorithmic ones.
Yep, explicitly banned algo stables, which, some had crashed spectacularly before. The act brought much-needed clarity and guardrails.
So why was this such a win for Circle?
Well, because Circle was basically already doing all of this. They had the full reserve backing, they were doing monthly audits, they had licenses like the New York BIT license.
So the regulation just formalized their existing playbook.
Pretty much. It created what people are calling a regulatory moat around Circle. It gives them a massive advantage over competitors, like Tether maybe, who haven't always been as transparent or compliant.
And has this clarity actually led to more adoption?
Definitely. We're seeing institutions getting much more comfortable. Banks, fintechs, payment companies are integrating USDC.
Any specific examples?
Sure. BlackRock's big BUIDL fund, the $2.9 billion one, uses USDC. And even national payment systems like Brazil's PIX are looking at integrating stablecoins.
So the Genius Act wasn't just good for Circle, it really pushed stablecoins into the mainstream financial world.
Without a doubt. It was a landmark moment.
Now, you mentioned Tether. The stablecoin market, it really feels like it's dominated by those two, right? USDC and Tether's USDT.
It largely is. A two-horse race for the most part. Tether's still the biggest by market cap, around $143 billion, maybe 60% market share.
Compared to USDC's $61 billion and 24% share.
Right. But the key difference lies in their approach, especially around transparency and what's actually backing the coin.
USDC is compliance first. Daily snapshots, audits, safe assets.
Yes, very transparent Tether. Well, it's had a history that's been described as, let's say, murkier.
How so?
As of early 2025, only about 81% of their reserves were reported as cash or equivalents. The rest was in things like Bitcoin, corporate bonds, potentially riskier stuff.
Which has attracted regulatory attention.
It has. Delistings in places like the EU, for instance. It's just a different philosophy. USDC banks on transparency, Tether banks more on, well, its sheer size and network effect, maybe with less disclosure.
And they seem to operate in different spheres, too.
Very much so. Tether is huge in offshore markets, Asia, Europe, really popular for high-frequency crypto trading, often in less regulated places.
Where is USDC?
USDC is dominant in the U.S.
Yeah.
It's the go-to on U.S. exchanges and DeFi protocols like Aave. And those partnerships with BlackRock, Fidelity,
Ah.
that tells you it's the choice for the more regulated institutional crowd.
Okay, here's something interesting, though. You said USDC has a smaller market cap, but earlier you mentioned its transaction volume.
Ah, right. Good catch. Despite being smaller, USDC's transaction volume in 2024, that $27.6 trillion, was actually higher than Tether's.
How does that work?
It suggests USDC might be used more for actual payments and value transfer, maybe higher value transactions within regulated systems. What Tether might fuel more trading activity, perhaps faster turnover, but smaller average amounts. It's like comparing a regulated fintech focused on core transactions versus a global giant with a looser playbook serving many different use cases.
Interesting comparison. Makes you wonder about the long-term sustainability of each model.
Absolutely.
So, Circle's got regulatory clarity, strong partnerships, high volume. But let's get to the bottom line for someone listening who might be thinking about investing. Is CCRCL stock a buy? It's had that huge run-up, 750% since the IPO, sitting at $180 a share now, market cap around $35 billion.
Yeah, the performance has been stellar. And analysts are pretty bullish, some projecting valuations hitting $45 billion, even $60 billion by 2027.
What's driving that optimism?
Well, several things we've touched on. First, the whole stablecoin market is expected to explode from $250 billion now to maybe $2 trillion by 2028. USDC is poised to grab a big piece of that pie.
Okay, massive market growth potential.
Second, that scalable revenue model. More USDC means more reserves, means more interest income for Circle. It scales beautifully.
Got it.
Third, the Genius Act. That regulatory moat is a huge strategic plus, attracting serious players. And fourth, those partnerships. Visa, Stripe, Coinbase, they're powerful network effects.
Okay, sounds compelling. But there have to be risks, right? Nothing goes up 750% without some danger signs.
Absolutely crucial to understand the risks. First and foremost, that interest rate sensitivity we discussed. A 1.5% rate cut could seriously dent or even wipe out profits. That's a major overhang.
Okay, risk number one, interest rates.
Risk number two, the Coinbase revenue share. Giving away over half your main income stream impacts margins. What happens post-2026 with that deal is critical.
Right, the negotiation.
Third, competition is heating up. It's not just Tether anymore. You've got PayPal launching PYUSD. Traditional banks like Deutsche Bank are getting in the game. The space is getting crowded.
More players fighting for that $2 trillion pie.
Exactly. And fourth, the valuation itself. A price-to-earnings ratio of 1,760. That's astronomical. It means the stock is priced for perfection. Any slip-up, any growth slowdown, any negative turn in crypto sentiment generally.
And the stock could fall hard.
Very hard. So the takeaway for you, the listener, if you're an aggressive investor with a long time horizon and a high tolerance for volatility, maybe CRCL looks like a generational opportunity. But you must be prepared for wild swings. It is not for the faint of heart.
Okay, let's zoom out one last time. Beyond Circle, beyond investing. What's the bigger picture here with stablecoins like USDC? How are they really changing finance?
Well, they're fundamentally rewiring how money moves. It's not just a crypto niche thing anymore.
We talked about faster, cheaper cross-border payments. That seems huge, especially for financial inclusion.
Absolutely critical. Think about people in, say, Nigeria or Argentina getting access to more stable value and faster, cheaper remittances. It's massive. But the impact goes way beyond payments. Stablecoins are essentially the plumbing, the backbone of decentralized finance, or DeFi.
Enabling lending, trading, without the volatility of Bitcoin or Ether.
Precisely. And they're key to this whole idea of real-world asset, or RWA, tokenization, turning things like real estate or bonds into digital tokens on a blockchain.
Like the BlackRock BUIDL fund using USDC.
Exactly. That's a perfect example of traditional finance embracing this digital infrastructure, using stablecoins as the settlement layer.
And the mainstream integration is just undeniable now, isn't it? That $27.6 trillion volume, the Stripe and PayPal partnerships.
It shows they're becoming embedded. This really is the digital dollar revolution people talk about. It's challenging the old guard, the traditional banks, payment networks like SWIFT.
Even forcing Wall Street to create its own stablecoins.
They have to keep up. And governments are noticing too, like Brazil's PIKE system, looking into stablecoins.
So Circle is right in the middle of all this, building the infrastructure.
They are absolutely at the forefront, building the rails for what could be a faster, cheaper, more inclusive financial system globally. The big question for you to ponder is, can they keep that leading edge as everyone else piles in?
Right. So that really wraps up our deep dive on Circle and USDC. We've seen they're a true pioneer, making this idea of a digital dollar very real.
Definitely. They've got that scalable revenue model, a big leg up from regulation with the Genius Act, and really strong partnerships. A lot going for them.
But it's so important to remember those risks we talked about.
Crucial. The sensitivity to interest rates is real. And competition is only going to get tougher from crypto rivals and traditional finance jumping in.
So whether you're thinking about CRCL as an investment or you're just fascinated by how money is changing, Circle is definitely a company to keep watching.
Well, sure. As this whole landscape evolves, they're right in the thick of it.
What stands out most to you from all this? Maybe think about how these digital dollars, this whole shift, could start impacting your own financial life sooner than you think. Keep exploring.